If you start a business, you need to select structure. As an accountant who works with hundreds of business owners every single year, the two most common structures I see are sole traders or companies. This will be the single most important decision you make in your business. Today, I'm going to go through the key differences between sole traders and companies and talk about how you can work out what is best for you. So let's start with the basics of a sole trader. So a sole trader is really just an extension of you. I think that's the best way to explain it because you will be taxed on the profits that you make. You're not a separate entity. It'll all be done through your personal tax return. So what will happen is that you will record in the business and professional items section of the tax return your income, your expenses, you'll come out with the profit, and then you'll pay tax on that at your marginal tax rates. Now, obviously, this will depend on what other income you've got, but wherever this income falls, it'll just be taxed at whichever marginal tax bracket it falls into. So this is very easy to set up because all you need is an ABN. So you can go to the government website here, ABR, and you can get an ABN for free and you can get started. So you might want to register a business name, for instance, but the costs are very low and very easy to get set up. It's also very low compliance ongoing because you don't have to do a separate tax return, so likely your accounting fees are going to be low, or you might even be able to do the return yourself. Now, it does come with some downsides. Obviously, it doesn't give us much flexibility because you're going to be taxed, unlike when we get into the company where we might have a bit more flexibility on who receives the profits. The other risk is that it is all in your name. It means that there is no separation. There's no separate legal entity. And therefore, if something goes wrong, all of your assets might be at risk. Now, this is definitely more of a legal aspect, but it is something to consider when you're weighing up sole traders or companies. Now, let's look at a company. Now, this is much more complex, but with complexity brings pros. So, a company is a separate legal entity. So you will need to actually register a company. It needs to have a constitution. It will have minutes. It will have shareholders. You need to get this set up properly. And if you don't get it set up properly, it can cost you a lot of money to fix it. So I'd highly recommend get the advice in this area and make sure it is done properly. Speak to your accountant, speak to a lawyer, make sure you are getting it done right for your situation. Unfortunately, I've seen people cut this step and they go straight and they think they're doing it right themselves, and then it ends up costing them more money down the line. So the company being a standalone entity, it has shareholders, but it means it trades. It will pay tax on its profits. So the company again will have income and expenses, and then it will pay tax on that. The great thing, this is a flat tax rate. So it's 25% for a small business entity. So it's very easy to work it out. If you make 100 grand profit, you'll pay $25,000 in tax. But what happens if you want to spend those profits personally? Well, this is something you have to weigh up, because if you want to take those profits out personally, you're going to have to somehow get them to yourself. You can't just pay tax on the company and then use the money personally. You need to either pay yourself out a wage, a director's fee, a dividend, or take out a director's or a Div 7A loan. So these things can be complex to work out what suits you best, but this is how you actually get money out of the company. And once it comes into your personal name, for instance, if you take a wage, you'll pay tax on that at your marginal tax rate in your personal name. Now, if you're taking a wage, you'll also have tax withheld on an ongoing basis, and you'll be paying super on it, just like you would a wage from any other business. So companies are definitely a little bit harder to manage, and they also have startup costs. So you're going to need to register the company, which is going to have a fee attached to it because ASIC charge a fee. So even if you do it yourself, you're probably still looking at, I think, around the $600 to $700 mark. If you use an accountant, this is going to vary anywhere from around about the $1,000 mark up to probably $2,000 plus if you're using a lawyer. You'll also have likely ongoing costs. So you're going to have an annual ASIC fee, which is around the $300 mark, goes up each year. And you're likely going to have additional accounting fees because you're going to have to get a tax agent to do your return, which is going to be more complex. They're having to lodge a whole nother entity that needs likely a set of financial statements as well. So just a little bit more compliance. And you also need to make sure you're managing this properly ongoing. You're likely going to be paying for some kind of accounting software. I would recommend Xero. There's a link in the description of this video where you can get a good discount there. But you're going to need to get onto that because you're going to need to be tracking everything that goes in and out of that company, because these are the company's assets, not yours personally, and you can get into big trouble if you get this wrong. Now, a good way to learn more about these topics is to subscribe to my free email newsletter. I talk about these kind of topics all the time. I talk about structuring, business tips, and tax tips. It's all free. It comes to you every single week. All you got to do is join via the link in the description of this video. So which is better, sole traders or companies? Well, it's going to depend on your situation. I know people hate to hear that, but that is the reality. You're likely going to need to do your own research and probably get your own advice. But let me run through some of the basics because we can get a bit of an idea based on your situation, what would be best for you. So let's look at a few different areas. Let's start with risk. If you're running a risky business, you're probably going to want to use a company because it is a separate legal entity and it can create separation from your personal assets. Again, this is more of a legal matter, but it is probably the route that most people are going down if they're running anything that determines that has a little bit more risk than other things. Then we're going to talk about profits. The more profit you make, the more likely you're going to want to go to a company. Now, there is going to be differing levels. At 50 grand, probably not going to make much difference. 100 grand still might not make much difference, but you might go beyond that. Now, it's going to depend on how much of those profits you need personally. Because if you need all the money personally, then you're going to probably not get any tax benefits of using a company because you're going to be paying it all out to yourself anyway. However, if you're in a situation where you might only need to live off 80 grand a year and you're making 180, you might be able to leave the other $100,000 in the company and pay the flat company rate of 25%, which is going to be less than what your marginal rates are, and therefore you're going to build up more wealth within that company without having to be taxed on it then. And that leads me into flexibility. If you want flexibility, companies are definitely the better route because they are going to allow you to determine when you're taxed personally on that income, because you can determine when you can give out the income to yourself. Now, there are some caveats to that. If you're running a personal services business or have personal services income, you definitely need to go get the advice because a company might not work for you. But in a lot of situations, you have that flexibility. You don't have that with the sole trader. Now, if you're just looking to optimize for cost, then a sole trader definitely is going to make sense for you. Companies come with the cost not only upfront, but likely ongoing. Sole traders are potentially free to get started, and you could do them for free ongoing as well. So that is something you need to weigh up. A lot of people will start as sole traders because of this low cost. Maybe their business is less risky at that stage and the profits are smaller, and they don't need that flexibility. As the business grows, though, they might start to hit one of those other 4 areas that changes, and therefore they might go, no, maybe now is the time to switch to a company. This is definitely something you can do in the future if you start as a sole trader, but you need to understand what are the ramifications if I choose to do that. And it could also be more work because you're going to get a new ABN, you're going to have a new tax file number, you're going to need new record keeping, so it can be a bit of work to do that switch over. If you do go down the company route, I have plenty of other videos on my channel that can help. But if you go with a sole trader, this upcoming video will talk about why most sole traders end up owing tax, and it is going to be something that you will likely encounter and you're going to want to know about. I thank you for watching this one, and I hope to see you over there.